Right. Well, I think we'll turn in a couple of minutes about what's ahead and what to do in the current policy debates. But I think just to get a little more to learn from what's happened and how each of you came to see the problem as opposed to many who didn't. Nouriel, when we met a month or so ago in New York to talk about this panel, I was very struck that you said that you had just been finishing your book on emerging markets and financial crises, and how that sensitized you or made you look at things differently than many. And I think if you could kind of share that a little bit.
Yeah, I mean, it was me, but not just me. I mean, someone like Ken had been speaking about the unsustainability of the U.S. current account deficit several years before. People like Raghu Rajan had been talking about the whole system of distorted incentive in the financial system. Bob Schiller was worrying about the housing bubble, and many others, Steve Roach and so on. So I think there were many people. You know, I was in Davos just last week, and we had a debate, and there was also Nassim Taleb, you know, who wrote the book about the black swan, and I asked him, do you think that this crisis was a black swan event? Because I said, to me, it looked like a white swan event.
You better explain black swan, not everybody.
I mean, black swan events are essentially fat tail events that would occur once in a kind of 1,000 years, you know. The term is referred to the fact when in Australia they discovered, you know, long time ago, black swan, something that came out of nowhere. So it's something like a kind of like a extreme kind of outcome, catastrophic from a fat tail of a distribution. So, you know, to me this event was a white swan event because I'd seen a build-up of vulnerabilities. In many ways, the United States looked like those emerging market crises. We've seen about 15 countries going bust between 94, you know, Mexico, and 2003, 2004, countries like Brazil, Uruguay, and so on, Argentina. So there was this build-up of a variety of vulnerabilities that signaled the risk of a tipping point. So to me, this was a white swan event, something predictable. Why many others did not get it, I don't know. You know, in periods of irrational exuberance, like in 2000, people were writing books, Dow at 36,000, and people were taking this thing seriously. Or in the last decade, people thought that home prices could go up by 20% per year forever. And there is irrational exuberance. People really, there is a fog of really not being economically rational. But if you look at the various factors, the U.S. looked like an emerging market economy. And of course, a country with the same kind of twin deficit, if there had been an emerging market, would have gone bust you know, several years earlier, while the U.S., by being a country with its own reserve currency globally, by never having default on its foreign debt, by you know, having a residuum of policy credibility and so on, could go on for a while longer. And in some sense, paradoxically, that made it worse. Because if it had been an emerging market, there had been a shut-off of funding few years earlier, and the catastrophe would have been smaller. Well, we could build up that for a little bit longer, and that made then the downfall even more severe.
Right. So, Ken, what were you seeing, or what was the perspective you brought to it?
Well, I mean, I think the thing I'd have to emphasize is I didn't have a clue of what the timing of this would be. So I wrote my first paper about this in 2001, and I gave it at a big conference as all the top central bankers and such, and I showed the picture of what was happening to U.S. borrowing, and I looked at other examples historically and showed that the U.S. was going along this path where everyone had had a catastrophe. Of borrowing so much in this highly leveraged situation. But, you know, Maury Obstfeld, my co-author, and I said, well, you know, we think it will be within 5 to 10 years because we didn't know what to say. Well, you're business people, many of you, and there's a big difference between 5 years and 10 years, and you can do pretty well in between. And I think that was exactly it, that I think a lot of economists agreed this couldn't go on forever, but what did that mean? And I think that it surprised me how long it went on. I would have thought it would have been triggered sooner. And I think that was the hard part. I was certainly, I didn't nearly stick myself out there quite the way Nouriel did of giving really dark scenarios. But I had been talking about this. And I'm an academic, and within academics, my view and Maury's had been totally rejected. So all the top journals now, because there's a lag, have papers coming out about how great it is that the U.S. can borrow so much, and it's healthy for the world economy because China needs it. And, you know, people would start seminars at Harvard by saying, well, I know there's this foolish opinion, that this is risky, but look at my mathematical model showing how great it is. And, so it's hard to get the market timing of it.
Right.
These guys didn't get it right.
Do you agree with the U.S. as a giant emerging market?
No, and that's exactly what I wanted to get into. Let me just start with a big compliment to Ken and his co-author Carmen Reinhardt. They've produced huge research on banking crises and financial crises that are becoming sort of the Bibles, if you will. And as a number cruncher, and that's what I do for a living, you go through this stuff and you look at it and all that. So I guess really the question I would ask, and it betrays my skepticism, is the current situation in the United States more like Argentina, Russia, or what Sweden went through in the early 1990s? I submit it's more like Sweden. Sweden had this huge increase in government debt, which you sort of signaled. It, by the way, had a big depreciation in its currency after a failed attempt to kind of peg its currency. No inflation, not a lot of inflation, didn't default on its debt. There's, I just caution a little bit about, it sounds great to say U.S. is an emerging market, but is it really? I'm not saying we're not going to go through a tough time, but really, is it more like what Russia went through, Argentina went through, than what Sweden went through? Very skeptical.
Well, Sweden had a boom afterwards, and I think that would be a dream, that we would.
Okay.
Obviously, our institutions are sounder, but we've got Blagojevich, we've got Bernie Madoff. It's,
Yeah.
In my view, the relevant question is not, of course, we're not going to end up like the Great Depression or like Argentina or Indonesia, that had a collapse of output, but the relevant question right now is whether we're going to end up like Sweden or like Japan. And the big difference between Sweden and Japan was that Sweden effectively nationalized a part of its banking system, cleaned them up, and then privatized them and took the problem, while Japan kept the zombie banks and zombie corporates alive for a decade, and the zombie banks would not provide credit. The zombie corporates would not essentially be able to spend, hire, and so on. And you had a 10-year depression or near depression with deflation and practically no growth. I think that we have a chance to do it like Sweden rather than that like Japan, but there is also a risk of a policy mistake going to lead us like Japan.
I just want to second, the policy response is key. Yeah. And I have been saying to people, it's going to be much better now, and it's certainly not a partisan thing, but I know the team that Obama appointed, and Nouriel does, and I'm sure Nariman does as well. It really is a fantastic team, and balanced, great people. I've talked to them all extensively about this. I'm really convinced they get it, and I've been telling people that, and so I knew he might not say anything as an inauguration speech, but I said, first Monday, we'll hear the plan. And by the way, my view of the plan should be nationalization.
Yeah, we'll come back. Don't go with the plan yet.
But we'll come back. But I thought they did. And then, okay, a week passes. They haven't said anything. Oh, they're trying to get it right. It's okay. And I was shocked by, listening to Tim Geithner, who gave a very good description of what the problem was, and actually said, some good things about where we need to go, but there was no plan. And that was scary. And it's clearly not him. It's the administration. It's frozen. And they need to move decisively, because 2009 is a lost cause. We're working on 2010 here. And if they don't do something in the next couple of months, 2010 will be a lost cause.